Trade recap for June 25th, 2026. Today was a crazy day. We saw some very strong movement, but I'm going to be going over within the high volatility how you can be patient and wait for an A+ entry and not catch FOMO. There was a lot of moments of FOMO for traders throughout this entire dump through 9:30 to 10 o'clock, but be patient, wait for a real setup. That's what we did today, and I'm going to show you guys how I did that. I am in the process of moving currently, so everything's kind of like going crazy, and I am tired. But anyways, let's get into it. Start on the daily here. ES is over here, but we're going to just go over on NASDAQ. We were in this daily bearish gap. At the time, we were around this level. And I expected that to hold, but I was also keeping my eyes on these relative equal highs up here as a possible draw on liquidity, because we need to view the market through a few different lenses: structure, imbalance, and then high resistance versus low resistance liquidity. This is giving me high resistance. This is giving me low resistance. So, yeah, I was bearish on the daily. 4 hour, I was kind of tossed. I did not have a full deciding bias. We were in this floating gap here. And then we also saw this bullish gap get tapped into, but I was definitely leaning bearish off of the 4 hour just because of the fact that we had several rejection wicks from this area, failure swings. And then down on the hourly, we saw that we generated liquidity on this 1 hour, under this 1 hour for value gap, which actually made me short-term bullish for the session it opened. I did not want to reach this level. I wanted to actually see a bounce off this hourly gap. Of course, we did not see that happen. And the market had some other plans. But that's the thing, like you need to be a if that then this trader. That's how you always stay on top of what it's doing. You're always prepared. I'm going to make my scenarios. If they don't play out, then okay, I'm going to reevaluate what is my new scenario. Do that over and over again until there's either not an A+ entry for the day and you get off, or until something shows itself of course, you want to look at the timing too. If you're seeing a setup happen past 10:45, sometimes even 10:30, you need to ask yourself if it's a good idea to put your capital on it and put your risk on it. You need to protect your accounts and your capital like your baby. And that's how I have a 75% win rate. Is I wait, I create scenarios, and I only trade with high time frame sponsorship. That is how you're able to excel in trading. I'm going to be making a lot of videos. I'm going back to the free content. I want to be able to have it accessible to anybody and everybody. Okay, so let's get into the actual entry itself. Now that you guys understand my higher time frame narrative there. So on ES, we take out this 4 hour internal low. This 4 hour internal low is very strong, and I'm going to show you why. There is a concept with fair value gaps called an IFVG. It is the first fair value gap on a new structure shift or on a manipulation leg. So this is the very first 4 hour gap that was made on this high time frame market structure shift. And we see that we tapped that, and that's what sent us higher before. But the internal low inside that area, I expect a lot of liquidity to be left at. So we take out that level on ES. We create the SMT off of it. So what I'm expecting is that we do not have to take out this low on NASDAQ. ES is already taking the liquidity for us. It's basically ES being like, hey, I'll take the liquidity. NASDAQ's being like, cool, I'll hold structure. That's how I like to view it with SMTs. They're not a requirement for my trades, but they just add an extra layer of confluence. So that's what I was seeing. Once we got that sweep and that SMT got confirmed, we saw a structure, generated structure, which is what you I never take a trade without generated structure on the lower time frame. So what that means is if this was the dump that I was taking a trade off of, I would not have traded. This is this straight noise and imbalance, but we see a pullback and a resweep. Some people call it a stop hunt. In this case, I don't really think that's what this is. But we generate structure to actually see real invalidation. That is so important for A plus entries. At that point, that's when I entered off of this 30-second inverse, the highest time frame inversion on this leg. We did not have a 1 minute. So in my scenario, I'm going to refer to the 30-second. Then we also, another reason why I was very eager to take this trade and it fell under A plus criteria is we had a very immediate 5-minute fair value gap for a break-even point. Looking on the 15-minute also, 15-minute fair value gaps are very strong draws on liquidity after we see massive imbalance and displacement. So I saw this as an area that price would want to seek after seeing our lower time frame generated structure and market shifts. Also, to add on top of it, we did have this 30-second change in state. Not a requirement for my trade, but once again, is adding on to the confluence. So I only targeted for a 1-to-1 just because of the fact of how the session already moved. When you see a big... This is basically is telling me that a lot of money has already entered the market and a lot of money is going to be getting ready to exit the market. So once these moves happen and we reach the bottom of the day, price can tend to be a lot more choppy and slow delivery to new higher time frame draws. We did end up delivering into the 5-minute. And then once again, you can see we started using that chop. Market starts slowing down. We did end up, I think we ended up eventually delivering to that 15-minute, but yeah, this is just a perfect example. This could have happened down here, to be completely honest. So that's why in these days, in these scenarios where there's a lot of money that have already showed its hand in the market, I'm going to want to take my piece of the pie and get out as fast as I can. So yeah, that is the trade recap. I definitely think that these bearish moves were unexpected, but you have to just look at what the market's giving you. When you see real delivery from a real level of money, real liquidity, not every high and low in the market is liquidity, guys. Like, you need to look at places that actually deliver and send the market, and real expectancy too. Like when I'm looking at this low right here as a strong point of liquidity, is because when we tapped it, we saw massive closing candles and displacement. It wasn't just a tap it and then we started consolidating around. I only want to use highs and lows that show strong displacement and intent from big players in the market. That is another way you can really excel your win rate. I am not marking off. I maybe have like 2 to 3, maybe 4 sometimes levels that I mark out on the higher time frame that I do not do anything with taking entries until those levels are interacted with. Also, I want them to be in line with the already existing higher time frame narrative. So yeah, that is it. This is the P&L for the day. I'm across 5 accounts right now. 3462. Yeah, that is it. Hope you guys have a great day, and I will see you all tomorrow if I end up seeing a good trade. If not, I'll post on my story. Peace out.